Franklin Resources just wrapped up their fiscal 2025 earnings call, and there's a lot to unpack. From massive growth in alternatives to groundbreaking digital asset innovations, this asset management giant is making serious moves. But they're also facing some significant challenges, particularly with their Western asset division. Let's count down the 10 most important takeaways you need to know. Starting at number 10, let's talk about Western asset management. This has been a pain point for Franklin, and October showed continued pressure with $4 billion in outflows. However, there's a silver lining here. Western's investment performance has actually rebounded dramatically, with an impressive 92% of their composite assets outperforming benchmarks over 1 year, and this strong performance extends across 3, 5, and 10-year periods as well. Franklin has integrated some corporate functions to drive efficiency, but the investment team maintains full autonomy. This could be a turnaround story worth watching. Number 9 focuses on expense discipline, and this is where CFO Matt Nichols delivered some encouraging news. Despite all the growth initiatives and market volatility, Franklin expects fiscal 2026 expenses to come in at or below fiscal 2025 levels. They've identified $200 million in gross expense efficiencies that will fund ongoing investments in alternatives, ETFs, Canvas, and the APRA acquisition. Even more impressive, they're targeting progressively higher operating margins each quarter, working toward their 30% margin goal. This kind of discipline while investing in growth is exactly what investors want to see. At number 8, we have Franklin's digital assets business, and this is where they're truly differentiated from competitors. Their tokenized and digital AUM surged 75% to $1.7 billion. What makes this remarkable is that Franklin is the only global asset manager offering digitally native on-chain mutual fund tokenization. They've built proprietary blockchain infrastructure that enables features like intraday yield calculations and daily payouts 365 days a year. They're partnering with Binance and other platforms, positioning themselves ahead of what Boston Consulting Group projects will be a $19 trillion market by 2033. Number 7 highlights their tax-efficient investment suite, which is capturing significant high-net-worth flows. They're seeing strong momentum across municipal bonds, SMAs, and their Canvas direct indexing platform. The key differentiator is their ability to combine all these tax-efficient strategies, munis, ETFs, Canvas, and option-based strategies, on a single integrated platform. As the wealth management industry increasingly moves toward fee-based advisory models, clients are demanding tax efficiency, and Franklin has built a comprehensive solution that few competitors can match. Moving to number 6, Franklin significantly expanded their private credit capabilities through the APRA Asset Management acquisition. This deal, which closed on October 1st, brought their total private credit AUM to $95 billion and enhanced their direct lending presence in Europe's lower middle market. This is a less crowded space with attractive opportunities, and it complements their existing Benefit Street Partners and Alcentra platforms. The ability to pivot between different types of private credit depending on market conditions gives them a real competitive advantage. At number 5, their ETF business continues explosive growth. ETF AUM has grown at a 75% compound annual rate since 2023, and they've now achieved 16 consecutive quarters of net inflows. With approximately $50 billion in ETF AUM, they're already halfway to their 5-year goal after just 1 year. Notably, active ETFs represent 42% of their ETF assets, but captured over 50% of flows in fiscal 2025, showing strong demand for their active management capabilities in this rapidly growing wrapper. Number 4 brings us to Canvas, their direct indexing platform, which is experiencing truly remarkable expansion. AUM has more than tripled since 2023, representing an 82% compound annual growth rate. Their partner network exploded from 67 firms in 2023 to over 150 today, while their financial advisor base increased 5-fold to more than 1,100 advisors. This positions them perfectly to capture growth as retail SMA assets are expected to double to $8 trillion by 2030. The number 3 spot goes to their infrastructure initiative. Franklin announced partnerships with 3 leading infrastructure firms, Actis, Digital Bridge, and Copenhagen Infrastructure Partners. Infrastructure represents a massive opportunity with an estimated $94 trillion in global funding needs by 2040. These partnerships will enable Franklin to develop diversified perpetual infrastructure solutions for the wealth channel, filling a critical gap in their alternatives lineup. Infrastructure assets are particularly attractive for income-focused investors due to long-term power purchase agreements and similar contracts. Coming in at number 2 is their alternatives fundraising momentum. Franklin raised $22.9 billion in private markets during fiscal 2025, exceeding their initial $13 to $20 billion target without even needing the Lexington flagship fund's first close. For fiscal 2026, they're targeting $25 to $30 billion, keeping them well ahead of pace toward their 5-year $100 billion fundraising goal. The wealth management channel contributed over 20% of this fundraising and is expected to grow to 25 to 30% in coming years. And the number one most important takeaway is their dramatically improved investment performance and consistent positive flows. Over 50% of their mutual funds, ETFs, and composites are now outperforming peers and benchmarks across all standard time periods. This represents real progress in their investment capabilities. Even more importantly, excluding Western Asset, they've generated positive long-term net flows for 8 consecutive quarters. They're seeing growth across key strategic areas, including alternatives, ETFs, Canvas, and multi-asset solutions. When your investment performance improves while you're simultaneously growing assets, that's the virtuous cycle every asset manager dreams of achieving. If you found this video to be helpful, don't forget to like, subscribe, and add your thoughts on Franklin Resources in the comments below.